Welcome. This is going to be my video over my updated criteria and such of what I'm looking for within the market to take a trade, how I get explosive entries, and I'm going to be going really in depth in this video. As you can see, it's 40 minutes, so there's going to be lots of good information in here. And if you like the stuff in here, I also do mentorship, but that's for if you really want to know the insights into midnight. But I hope you enjoyed the video. Let's get into it. So here in this video, I'm going to be breaking down more of how I see and view the market. Okay? Because it goes way deeper than you think. There's still more to it, but this is going to be a video of basically the checklist of everything you need to be going through and making sure you see this for a high probability setup. Okay? And here to start, we're going to be looking at the candle first, okay? Because there is many ways to view a candlestick, okay? And when you view it in the lens of the power of three, it really opens the market. It opens doors that you never thought were there, okay? So what is power of three? Okay, power of three is accumulation, manipulation, and distribution. Okay, so how do we see that within a candle? Well, here on this bullish candle, okay, so we have the opening price here of this candle. So this candle can vary from a 1 minute candle all the way to a yearly candle. Okay, there is power of three within every candle. Okay, there will be very few times when you will see one side of a candle fails to leave a wick, okay? And that is usually caused by SMT for that to leave and stay there. We'll go more into that later. For now, we're just going to focus here with a full candle and full power of three, as this is what you see in the market every day. Okay, so we have that opening price of the candle. Why is that opening price so important? Okay, you always want to be marking those opening prices. And for me, I'm usually using that 4-hour power of three. So I'm marking out that 2 a.m. price, the 6 a.m. price, and 10 a.m. price. Okay, those three prices are going to be very important for those 4-hour candles, as if you are bullish, you're going to see the open of the candle, and then you want to see a move below the open, okay? And what needs to happen in this move below, okay? This is where you want to be looking for if we're hitting a higher time frame key level, a liquidity pool, or we're seeing our lower time frame SMT inside this wick. Because inside this higher time frame wick, this is lower time frame candles, okay? So when you go down to the lower time frame, it's going to clear up the story for what was happening down here, because you want to see SMT on the lower time frames, because that is going to confirm your idea of wanting to see the lower end of the 4-hour range if you're bullish, okay? So that is going to be forming the wick, which is the turtle soup on the 4-hour time frame. For example, if we're using a 4-hour power of three, okay? So if you're trying to buy for a 4-hour candle, you're looking for a move below the opening for manipulation, okay? And then you want to be buying that manipulation. So after we're seeing SMT at the low on the lower time frame, then we see our displacement and create our PD arrays of interest that you want to enter off of. For me, that's typically a breaker. And then, so we saw the accumulation here for the open. And then you see the manipulation below the open, and then they distribute it to the highs, and then they retrace it going into the close of the candle, because they need to form the higher end of that wick, okay? The higher end of that range, whatever candle you're measuring. In this case, we're talking about 4-hour power of three. Okay. So in this case, this would be the higher end of the 4-hour range. So in a very clean 4-hour power of three example, it doesn't happen this clean every day. But this is what I'm saying. In a very clean 4-hour power of three example, you'll see that first hour of the 4-hour candle be the accumulation, and then you'll see the second hour start the manipulation, and then you'll see that third and the last hour be the distribution, and then that little retrace to close the candle. Okay, once you can learn to look at a candle like this, it really clears up the story, because I have given a lot of other tools to be able to determine if we are seeing a valid trade or not. And taking into account power of three on the higher time frame candles, it can really clear up the story for what you're expecting. Okay? And it can help you catch greater trades. So here we're going to be moving into the chart examples here. All right. So I lied. Before I go into the chart examples, I want to go over a checklist here. Okay. So this is the things that you should be looking for every day when you are looking to take a trade. Okay. So the first thing that we want to see every day is midnight price. Okay. We're not looking to even think about taking a trade until after midnight. Okay. Midnight price is going to tell us everything. It is the framework, because when we're inside the 4-hour power of three as well, we are going to have midnight price. So if we see the manipulation of the 4-hour candle, so if we have the open of the 4-hour candle and we see manipulation below and we are bullish, so we're looking for a move below the open to buy, and then we also see that manipulation of midnight price right there, that is your low risk buy. Okay. That's your high probability long entry. Okay. So after we see midnight price, we have an idea of what we can expect. Okay. Because once we see midnight price, we know the level that smart money is using to determine for manipulation. Because if smart money is bullish, they are waiting for that move below midnight price to buy it. Okay. They're not buying above midnight price. Okay. They're buying at the best prices possible. So after we see midnight price, we want to see liquidity. Okay. So we want to see liquidity being purged. And this can be on just the NASDAQ, just the ES, or just the Dow, or it could be 2 out of 3 of the indexes. Because when we take liquidity, this is when we want to see SMT forming. Okay, so this goes into my next one. So after liquidity swept, that is when we're going to see that SMT forming, because that is what creates SMT. It is when we are having offset distribution between correlating assets. Okay. So when we are seeing the NASDAQ and the ES both make a higher low while the Dow made a lower low and we're bullish, then we're looking to buy there. Okay. If we're seeing SMT at the lower end of the range in the 4-hour power of three, when we're expecting the wick to be forming there, and we see SMT and our liquidity swept, and then we start seeing our PD arrays of interest to enter on, it's a very high probability setup. Okay. So we always want to see midnight price so we can see the manipulation. Then we see liquidity, which then moves into the next thing of seeing SMT forming. All right. So once we're seeing SMT forming, that is what is confirming our trade idea. Okay. So we want to have an idea of what we want to see with price already going into the day. So whether that is rejecting or bouncing on this higher time frame array to an internal liquidity pool, or you're trying to catch the whole daily range. Okay. It can be as simple as moving from PD array to PD array, or liquidity pool to liquidity pool. So after we see SMT, this is when we're looking for entry. Okay. I prefer the breaker, as you hear me talk about it all the time. Okay. Breakers are one of the strongest concepts in PD arrays out there. Okay. Breakers are so strong, they can leave fair value gaps open, where fair value gaps can be used as a breakaway gap and never traded back to you. We don't need to rebalance that because of a breaker. Okay. And when you use the other tips and tricks I've taught to determine a high probability breaker, it is very strong. Okay. Breakers in SMT. I've talked about it before. A breaker after SMT, it's better than sex. Okay. It's crazy how accurate it is. I'm telling you. Um, so yeah, once we see our PD array of interest that we're looking to enter on, okay, then we're seeing entry. So for me, I'm using breaker a lot too, because once we form a breaker, we have a swing point to project off of. Okay. So that leads into my next thing, standard deviations. Okay. Standard deviations are so precise and accurate, and they tell you what is happening in the marketplace. Okay. I talk about 2 to 2.5 standard deviations and 3.5 to 4. Okay. Those are the two key spots you need to have marked. You are doing yourself a disadvantage if you are not using the standard deviation. It is mind blowing how often and how accurately the NASDAQ moves to and respects that 2.5, or that 2 to 2.5, and then that 3.5 to 4 standard deviation spot. Okay. And like I said, it can tell you what is happening, because at 2 to 2.5 standard deviations, that is where we're expecting that reaccumulation or reversal. Okay. And I've given other tips and tricks to determine if we are going to see that reversal or reaccumulation, and where you can expect that reaccumulation to about go to then buy it or short it for that redistribution. Okay. To 3.5 to 4, where we're likely to what? Cap the range. Okay. So when standard deviations are lining up with your targets, whether that be midnight price, a fair value gap, or another liquidity pool, okay, when standard deviations, the 2 to 2.5 and 3.5 to 4, are lining up with your targets, it adds lots of confidence and confluence to the trade. Okay. It is way more high probability when standard deviations are aligning, because I'm telling you, every single day the market is moving 2 to 2.5 or 3.5 to 4 standard deviations from an institutional swing point. Okay. You don't need to believe me. I don't care if you do or don't. You can go back and look at it every day. I'm showing you it every day. All right. So once we can see our standard deviations, okay, we have our targets that we're looking for. So this is when we are letting the trade play out. Okay. So we're not looking to move our stop loss to break even or in profits until we're either hitting our first TP, or if we're starting to see signs of SMT at, so if we're bullish and we're starting to see signs of SMT at the highs, and it's not looking like price is aligning how you wanted, and we're starting to turn back over, then there's no problem with moving your stop loss to break even there, or just taking the position off completely, because the whole time throughout your trade, you want to be monitoring what is happening. Okay. So these are the 5 main things within my trading. Okay. It doesn't look like a lot, but with how deep you can go into each one of these concepts, it is absolutely mind blowing. Okay. Because, so take in this, and then let's add this to the power of three. Okay. So I'm going to move over to a new example. All right. So I think this is going to be really good to train your eye. So here, imagine this is the 4-hour candle, and here on the right is the 15-minute candles breaking down the 4-hour candle. Okay. So we're going to be going more in depth here into the candle and how it's forming and how the low is forming and everything. So let's look at this checklist we have up here, and let's add this into here with how we typically see. Okay. So if we're looking here, typically you're going to see midnight price being here if you're wanting to see that manipulation. Okay. So we have midnight price here, for example. All right. So when we're going into that new 4-hour candle, okay, if we are bullish, we want to see that manipulation below the open. And then if we're seeing it below midnight price as well, okay, that is when it's really high probability. Okay. So then here on the lower time frame, that's when we're seeing the moves below. And then we're seeing the lower end of the range being created with the wick of the 4-hour candle. Okay. So in this time, this is where you're seeing the SMT forming, because here on this move down, this is where we're hitting. Okay. So we're either hitting our sell side liquidity target or we're hitting our key level. Okay. So sell side liquidity / key level for us to reverse off of. Okay. And here, so we're hitting the level, and this retrace back down. Okay. This is the retrace onto the breaker. Okay. This is where you're likely to see SMT form. Okay. So we're seeing SMT here as the NASDAQ is coming down, failing to make this lower low. Okay. While the ES or the Dow would be making a lower low here, creating SMT. Okay. So when we're seeing that SMT forming, that is when we're expecting the lower end of that 4-hour range to be forming. Okay. Because we know we're in the wick of the 4-hour candle, and we know we have not seen distribution to the upside yet. We have not seen any real manipulation above the open. Okay. So then they're going to give that move above the open, retrace to the breaker, SMT, and then boom, distribution up. Okay. The amount of times and how accurately this works within a candle is mind blowing. And then you'll be able to have your standard deviations, your swing point down here. Okay. And then once you have your swing point and your standard deviations, you're going to be seeing that 2 to 2.5 lining up at a target, and then that 3.5 to 4 lining up at a target. Okay. And not always are we going to reach for that 3.5 to 4. That is why you need to be wary and take a partial at 2 to 2.5. Okay. And then you can see we're just going to move right up for 2 to 2.5 standard deviations. And then this is, we're going to be closing the 4-hour range. So then you're going to see a retrace into the end of the candle like this, so that then they can close the candle to create that higher end of the wick. Okay. So everything is projectable inside a candle from the low to the high like this. Okay. I hope this helped you and is helping you see the candle more and how it plays out and how it gets broken down, because this is happening every fucking day, every day. Okay. Now here, as some of you have probably already clicked off, as I'd expect, as this is a more boring and informational video. Very good information here, but we're going to be moving into the chart examples here now. Okay, so now here for the first example in the chart. And before any of you think this is hindsight bullshit, we traded this live and called it out live. Okay. So As we do going into each day, we mark out midnight price. We're not looking to do anything until we see midnight price, because midnight price is the framework for the day. That is the true open of the daily candle. So you're going to see that move above it to create the wick, to then distribute it lower if you're bearish, and then the opposite if you're bullish. Okay. So let's break down this price action here and why this was a really good setup and how you could have capitalized on it. So right here standing out, as we're going into midnight price into the new day, just looking here to the left, let's see what stands out to us, because there's one thing in specific that should stand out, and that is this gap right here. Okay, so from the 4 or the 5 p.m. close to the 6 p.m. open, we left a gap below. Okay, so we have a nice gap below that we are anticipating to be traded back to, because we will fill gaps. And when we have that bearish bias, we want to see what? A move above midnight price, okay? Because we want to be trying to short above midnight price or just at midnight price after we've seen the manipulation above, because not always are they going to give or show the best entry above. Sometimes you'll get it right at. All right, so then you can see what time is right here, 2 a.m. And what happens at 2 a.m.? Okay, that is the new open for a 4-hour candle. Okay, so this is pretty much the same setup I was just showing you an example for. We're going to be using 4-hour power of 3. So this to the 4-hour open. Okay, so we have midnight price. We know we're wanting to see manipulation above midnight price because we have a gap below. So we want to see moves above to take it lower. Okay, so we want moves higher to be able to short in a premium. We want to short when prices are expensive, not when prices are cheap and moving below midnight price, okay? Because then you can see they rally it above, and then they wait for 2 a.m. to give this last push in price, okay? Why was that? Well, they're taking out buy-side liquidity. We're hitting our bearish order block over here, and why do they wait for that 2 a.m.? Well, because they need to form the higher end of that 4-hour candle. Okay, so up here, as we're making these higher highs, okay, so we're still in sync here across the markets. Okay, the Dow and the ES are all making higher highs here, so there was nothing to my interest here yet, but we know we're likely to be seeing that manipulation above the 4-hour open. Okay, so we're waiting for our entry. And what is that we're waiting on? Well, typically I'm waiting on that breaker entry that was right here. And you can see we get the retrace back up into the breaker and fair value gap. And then boom, sold off. Okay. So right here, once we formed this breaker, you already have your swing point, like I was talking about, to project. Okay, and I was just telling you what should stand out to you in this chart, this gap right here. So we have the gap, and then we have our 2 failed swing lows here. Okay, so we have our sell side liquidity, and you can see how well both of these targets are lining up with the standard deviation projections. Okay, so this gap is resting right at 2 to 2.5 standard deviations. So this is your first high probability target, and it's at 2 to 2.5. So we're expecting what? Reaccumulation or reversal. So if we were to see moves below this gap sitting at 2 to 2.5, that is when you can expect that expansion down to 3.5 to 4. Okay. Not to mention if we see the reaccumulation like this back to a certain spot that I talk about all the time. Okay. And then they distribute it lower, because what happens here on this reaccumulation as well? What did this move into? Another bearish breaker. Okay. So the first entry up here, this is a high probability entry because we're also seeing SMT here as the Dow and ES are making higher highs here. Okay. This is the other thing. Uh, whoops, did not mean to be on the box. So here on the reaccumulation, if we're expecting reaccumulation to still see lower prices like this, because why should we still expect reaccumulation here and not reversal? Well, did we hit the gap? No, we did not hit our target. So we're expecting reaccumulation. And the reaccumulation moves into what? A bearish breaker. And not to mention, what else is happening here? This is actually a new 4-hour candle. Okay, so we have a new 4-hour power of 3 in play here. So right here, once again, a new 4-hour open. Okay, and so once again, we see the move up. And right here, this is where you need to go into your own charts and go look at the ES and the Dow here, okay? Because this is where we're seeing more SMT to confirm the high of this 4-hour range again, okay? So we're seeing SMT here. I believe this one is with the Dow, and then we have a second SMT from this high to here with the ES. I believe that's what it was. And so we're seeing double SMT here at the highs, a move above the 4-hour open when we're still bearish. We never reached our targets, okay? So once we're seeing this reaccumulation after we came up short of the target, you can expect in this next 4-hour candle to see the distribution to 3.5 to 4, because we're likely to just see that move down now after we're seeing SMT at the highs to move through 2.5, 2 to 2.5 to 3.5 to 4, because we saw that reaccumulation. Okay. So when you break down everything like this, it really clears up the story. And just using midnight price alone. Okay. So if I was to clear everything off my chart here and only mark up midnight price here, this alone should show you how important midnight price is, because the idea with midnight prices, we're looking for our best short opportunities, and our best short setups will form above midnight price. And then the opposite for buy setups, our best buy setups will form below midnight price. Okay. And you can see here, if you're looking to short above midnight price, look at that. We went back below it. And then look at that. If you're looking to buy below midnight price, look at that. Rallied back above. And then same thing up here. Boom, short it. We went back below. Same thing. Look at this. We returned back to it later in the day. And then look at that reversal. Look at that reversal. It's almost like they had to take it back to midnight price here for some reason to then reverse it. There's reasoning behind everything, my friends. All right. So just using this checklist and everything I'm showing you within your trading, it is going to greatly improve your understanding on the market and your accuracy within trading the market. Okay. Because once you start to see these things every day and how they repeat, obviously every chart is not going to look the same every day. Okay, we're not going to sit here and accumulate from 530 to 750 every day. It's going to look different every day. But I am telling you, when you are using the opens and using SMT and the things that I'm telling you to this degree, you are going to start to see the market how I do. Okay, you're going to start to see the truth. So for this example, we're going to be going into the lower time frames here, and I'm going to be showing another trick that I like to use for my entries and how I get explosive entries a lot of times, where I'll enter and then we'll see a quick move away from my entry, and then I'm able to put my stop loss to break even. Okay, so this is how I'm determining those entries. If you're not taking notes here, you're missing out. Okay, so before we go into the lower time frames, we need to know the higher time frame structure behind the trade. All right. So we need to have framework to work with. And going into the day, we wait until midnight price as always. And then that's what set up this setup for me. So let me move just to the NASDAQ chart here to explain this. So let's look at midnight price here. So you can see we just had one move straight away from midnight price. We had no real manipulation under midnight price, okay? So when you see that, you can anticipate the move that's happening now to be the manipulation, okay? And to have a move back to midnight price, okay? So going into the morning, we already saw a clear accumulation range right here. Okay. So I'll mark this out. So before this even happened, I shared this image with the Discord. It was the white box here with the red one for showing manipulation. And then wanted to see distribution to midnight price. And then I talked about we could see these lows, which I'll talk about here soon, but midnight price, okay? It is so important. Smart money uses midnight price every day to determine manipulation for their entries, okay? Midnight price is the true open of the day. Okay? So we're going to see moves on both sides of midnight price every day. There is only going to be 1 to 2 days out of the whole month that you would see a move away from midnight price and we never refer back to it. And that's a maybe. Okay? It is very consistent that we will trade onto both sides of midnight price. And the times we don't, it is still predictable with SMT. Okay? And other PD arrays. So I shared this. I saw a possible accumulation, manipulation, and distribution model back to midnight price. Okay. So once I shared this idea, I saw the higher time frame structure to this. Okay. So what was I seeing on the higher time frame here? What was the narrative behind this of why I was expecting the move back down, which followed with my analysis to wanting to see a move on the other side of midnight price? Well, here on the 4 hour last night, we had the Iran news and it shot us straight down through the monthly FVG. Okay. So I was anticipating this move back up to retest the monthly FVG. And look how well here the candle bodies respected the 50%. Okay, so we were seeing that manipulation to create the wick because these moves on the lower time frames, like the 1 hour, yeah, above this higher time frame PD array, these are fine because the higher time frame, it's a wick, okay, and it's a higher time frame array. So going into the morning as well, I shared this. This was a big factor as well in favoring lower prices. So this high here on the NASDAQ, okay, so from 3 p.m. on Thursday, okay, draw this high out, we can see the NASDAQ fell short of this high. Okay, let's look at the Dow here. That same high, that 3 p.m. on Thursday, let's mark it out. Okay, the Dow ripped through that high, okay? It saw displacement through it. And then you can see it did end up tagging this high. But at this time, when we were looking at it in the morning, we were just taking out this high, okay? So right there, we were seeing our higher time frame SMT here, okay? We're on the hourly chart. We're seeing this SMT here on the hourly. Okay, so then once we go down to the lower time frames, I want to see a lower time frame SMT to confirm my idea of wanting my entry, because that's going to confirm our bearish PD arrays in this case and confirm our bearish order flow to resume. All right, so Now that we have narrative behind it and we know we're retesting the monthly FVG, we want to see a move back to midnight price. We left a nice 1 hour FVG right under midnight price. Okay. Let's move down to the 15-minute chart here. And you can see the 50% of that monthly FVG. You can see how well we were respecting it here before we broke up through it for the manipulation when we were seeing this accumulation. Okay. We see the manipulation. And then once we broke right back below the 50%, like I said, we retested it and then boom, right down to midnight price. The 50% of these higher time frame ranges, PD arrays, wicks, all of them are very important, okay? They are going to be sensitive levels. All right, so when I go down to the 5-minute here on the NASDAQ, so we saw our clear accumulation here, followed by what we thought was manipulation as we're seeing SMT. And then we want to see the lower time frame SMT to confirm our theory. But let's look at this real quick. Okay. This is the ICT market maker sell model. Okay. This is repeating every day. All right. So I'm going to pull this up again right here. Okay. So let's look at the high here. Okay. So we have our accumulation at the highs. That's what we're having here, where we're creating what? SMT. Okay. So ICT is given this image, but he hasn't gone as in depth into it or annotated this image like it should be, because there should be your higher time frame key level being hit, and we should see SMT here, and then the market maker sell model can resume, and then obviously add time into it, but that's for another day and another talk. But so we have our original consolidation. We'll look at that from right after midnight price. We saw consolidation. Then we see that first stage of distribution. Okay. And then we see consolidation again. Oh, how random is that? And then what do you know? Boom. Second stage distribution. All right. And then this is where we're seeing the consolidation, the higher time frame SMT. All right. And then would you look at that? Gets the first move down. And then look at the accuracy of this. Okay. So on the first move down, it comes back up to test the consolidation lows, okay, from the manipulation. Let's look at this. The first move down comes back up to test the consolidation lows, and then look at this, second stage down, and then consolidates, and then boom, through midnight price. All right. And which was also the low of the consolidation. Okay. These images are not to sell. Like, he accurately, these images accurately show the market every day. Okay. So obviously you're not trading blind off a pattern. Okay. I'm showing you the other things and the framework behind this that is going into it. Okay. So let's get into the lower time frame here with the ES. Okay. So let's look here at the highs. So here on the NASDAQ, the highest high was made here at 8:30 a.m. Okay, it's not random. Let's look at the ES here. Okay, 8:30 a.m. Here was that high. So we can mark those out just to show you. So there's the 8:30 high. Now let's look at the ES. Boom, the ES takes out that 8:30 high right there. Okay, and right there was my entry. Why did I enter here, and how did I know it was going to be a turtle soup to go lower? Okay. Well, this is a recipe for turtle soup. Okay. There's not a lot of information out there about turtle soup, but turtle soup is anticipating SMT like this. Okay. When you can anticipate SMT, you can trade turtle soup very accurately. Okay. And here, as we're seeing the SMT. Okay, so I'm monitoring all three indexes while I'm looking to take a trade. Okay, and right here, as we see the ES reach up for that high to create the lower time frame SMT, that is when the NASDAQ is trading back into a 5-minute order block, a 5-minute breaker, and the high of the monthly FVG. Okay, so these higher time frame key levels, they're so important. Okay, and not only that, look at this first move down was below the monthly FVG, the 50% of it. Okay, so right there was our break below that I was talking about, and then they give the retest of the breaker. And I've talked about this many times before, and if you don't have it in your notes now, you're crazy. When we are in a market maker sell model, okay? This is a market maker sell model. We want to see lower prices. When we are on the sell side of the curve, okay? So that's the curve going downwards, okay? So if I put this on my chart, this left side here, this is the buy side of the curve, okay? Then here on the right side, we were on the sell side of the curve, okay? And here on the sell side of the curve, on the way to our draw on liquidity, the moves above old highs will be false market structure shifts and or turtle soups to go lower. Okay, so you can see this here, moved up above an old high here, and that was also into our bearish PD arrays of interest and where we're seeing our lower time frame SMT. So right there was my entry, and then boom, the explosive move right back lower. We caught the wick. Okay, you can't get scared there because at one point this candle was a big green candle. Okay, people are like, oh, we're moving back for the highs, we're breaking back above the monthly FEG. No. Okay, midnight price told the story. And then you can see again, we move lower, and then you see consolidation. And then what's this move right here? Above an old high. Look at that turtle soup. Boom, right into midnight price. Okay, none of this stuff is random. And what happens once you have a breaker? You have your swing point to project off of. Okay, so here was the 1 minute projection I was looking at. Okay, so the 1 minute projection showed 2 to 2.5 at the consolidation lows here, and then 3.5 to 4 at midnight price, which is why I just took profits at midnight price. I mean, this was over 100 points. If you're not taking profits or a partial on that or trailing your stop loss, at least you're crazy. All right, but then where we created the breaker, you can see 2 to 2.5 also resting just below midnight price. Okay, so when we have the standard deviations lining up with our targets inside a market maker model, because standard deviations play a huge role in the development of a market maker model. Okay, this is a talk for a different day, but the 2 to 2.5 is so key, and 3.5 to 4, as this is what you will see typically capped the range. And you can see here, what did we move into at the low? Oh, 3.5 to 4. And where do we start consolidating? And in the day, right there at 3.5 to 4. And what else lined up with 3.5 to 4 standard deviations? The previous day low. Look at that. Right in 3.5 to 4. Okay, none of this is random. This is happening every day, every week, every session. Okay, from the 1 minute all the way up to the monthly. This is a very clean market maker model here, but this is what I'm looking for every day. Okay, the higher time frame array, or let me start over. We're starting with midnight price, okay? Because we want to see the manipulation of midnight price. But going into that, we have to have a narrative of what we want to see for the day. Because if we are bearish, we want to see those moves above midnight price so that we can short, okay? We're trying to trade in the direction of the higher time frame order flow. And I showed you the higher time frame, 4-hour chart right here on the NASDAQ. We broke below the monthly FEG. and we were getting the retest here. And then we saw our SMT to confirm the continuation lower and the retest, okay? And then we just continued into our imbalances that we had here. You can see a clear imbalance here on the 4-hour. And yeah, and we went for a new weekly low. So this was a really good breakdown here. Some of you are going to need to watch it twice, and that's fine. Go back, study this, remember it. All right. And look at this as well before we go off here. Midnight price. Once again, they give the reversal back up before the lows. And what do? Before they take it into 3.5 to 4 standard deviations and the previous day low, which was the sell side liquidity, they take it right back to midnight price for one more tap and actually went above it there, which was what? There's your manipulation again. And then they slam it into the lows, okay? Midnight price is so important. This is what I'm telling you about smart money, is using it for manipulation. Right here, when we're manipulating midnight price again before we've hit that sell side liquidity, that is where smart money is entering short, okay? Midnight price is the framework for the whole day. Go in with a bias, have your higher time frame key levels. Don't hold on to your bias all day if we're invalidating the key levels you wanted to see hold, okay? If we had seen the move up and wiped this SMT, I would not have been looking at this idea, okay? That was the idea, and then that's why I look for the lower time frame SMT to confirm the idea, okay? Because it came inside the market maker sell model once we confirmed the breaker, okay? So you're seeing why I focus with midnight price and breakers. They are very key within the development of a market maker model. And then when you add in standard deviations, the accuracy is wild. All right, so I'm going to leave you all on this one. I hope you enjoyed this video and got something from it. And let me know if you start using this in your trading. I'd love to start seeing it. Have a good one.